All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. Apologize for the video issue here this morning, but it looks like we got that straightened out here. You will notice next week we are switching to a different video system. So far, tests have been really good with it. But anyway, let's go look at this market here today, and let's start with the broader market. The S&P 500 is down about 3 points. Nothing major. Okay, we've kind of talked to, these Bollingers on the market are contracting. The probability of just kind of going sideways through the first week or two of earnings season is pretty high. Could we see some more selling, even some more buying? Sure, but to really make some sort of monumental move higher or lower probably isn't going to happen at this point. Our positions, Bank of America, which opened up a little bit higher, has just kind of been sold ever since the open here. We saw the pre-market, most of the pre-market was trading around 1710, and in the last 3 minutes we saw an order kind of come in the pre-market. It jumped the open price for Bank of America up to 1720 and really fell off that really quickly. It wasn't like it really traded there or anything. The chances of us pulling this position off today are probably zero. This is something we'd like to hold on to 3-4 weeks and then use the FCX money to trade around it, but looking for an 18 to $19 area there on Bank of America. With Freeport McMoRan, this thing traded down slightly in the pre-market, then up slightly, right here around 37. I commented I'd love to see this thing push up into the 37.5, 37.70 area. We get up there today, be more than happy to pull it off and look for new entries on Monday. My concern is today option expiration. Do we see this stock get pinned here at 37? Being a strike price, we could. I don't know that FCX is a big pinner as far as investors taking it to a certain level because of options on options expiration, but just continuing its upward move here with Freeport overall here. Mel and Merlin here. SLV, okay, silver up about 1% here today. Interesting place to find some strength here as a kind of small little pullback, now bouncing up here, and it's helping some of the miners and in particular SLW. Citigroup last night came out with a very interesting piece, and Citigroup their analysts have been very bearish on the mining sector for years now. And they came out with a piece, and they basically talked about how they're bullish on the mining sector, and they think a lot of the bad news is already priced in, but they are concerned that they're early on their bullish call. And, so they were making kind of a 12-month call that, sometime in the next 12 months, these stocks are going to bottom and go. That bodes well for, some of these gold, silver miners and whatnot there. It also bodes well for things like Freeport McMoRan, FCX, which we are in. As far as taking profits on SLW, Mel, there's nothing here that says, hey, take profit. Okay, there's nothing here, but a lot of times with SLW, there isn't going to be something that says take profit. There's no real overbought nature. If we kind of just do a few metrics and kind of do a little bit of measuring here, we have this downtick. Our first retracement is up in the $23 area. Okay, so right up about here, and that's the logical place for SLW to move here. Okay, given the fact that SLW is breaking into kind of new short-term highs here, I'd be more apt to let it go and let it play and let it move, simply because you do have the underlying, the SLV supporting it. You also have gold supporting it, okay, with its little bounce, and you have the GDX, okay, the gold miner index, also supporting that. So, kind of all the way around. I will never criticize anyone who wants to close out of SLW and take profits. This thing can be wild, but from a technical standpoint, there's not a whole lot there that's saying, "Hey, pull this off." Okay. Yeah, Johnson & Johnson flying everywhere. They have earnings next week, early next week. It's been in this pretty heavy consolidation between 94 and 95. With today options expiration, is it going to break out? We've seen those. We've seen stocks break out heavy on options expiration, but that's not a typical thing overall. Okay. But Johnson & Johnson, this is one that I keep looking at the options. I keep going back and looking at it and saying, man, this is one that I'd be very tempted to be in on earnings. Yeah, thanks, Carl, on Tuesday morning. So it could be very, very interesting there. Okay, Mel, yeah, you have the $20 calls. Okay, so you're in the money. You're not dealing with a lot of decay there. Okay, sounds good. Sounds good. Apple. Let me just go take a look here. Bank of America, nothing different. Freeport McMoRan, nothing really different there. Apple. Okay, we talked a little bit about Apple yesterday, and talked about this 550 level. It really looked like it wanted to come to 550. Pre-market traded at 550 most of the time. It has since broken that level, went down to 547. Here's the thing. When we pull up Apple, they've had these upticks, back here in December, the uptick on the China Mobile deal. Then they had this gap up here on the iPhone in China. The sales are going better. But other than that, they've really been sold pretty much, except for those two kind of news events. That is concerning. That is concerning from a technical standpoint. Gapping down here to 550. It's tough to just want to buy it here. I want to see a little strength potentially come in. The real kind of support level to watch is kind of this gap from earlier this week, and this 545 level, kind of hitting the lower Bollinger. Okay, we get this uptick from the 13th to the 15th. That sets a new short-term high, right? We kind of break this downward trending channel that we've been in since late December. Now do we set a higher low here, saying, okay, you know what, Apple's ready to move. When you look at Apple, the one thing we have to realize is that they're pretty fairly valued, from an earnings to growth standpoint. Okay, now, I know there's going to be some heated debate amongst analysts about that, but this isn't something that without, they need a good earnings report, some sort of future outlook boost in order to really get that kind of fundamental move higher. General Electric reported earnings here this morning, and Carl had started to talk about this briefly, I think, when the video froze, and they're down about almost 3%, which for General Electric is a huge move. Okay. Now, General Electric, I rarely will trade it, especially around earnings. But it's one of the most important earnings reports to keep in mind and to look at. And the earnings report overall, not too bad. One of the things that really caught my eye is the strength, and they talked about strength in oil and gas, okay, which we kind of saw a little bit confirmed from Schlumberger, but they also talked about the strength in aviation and defense. Okay, who's that bode well for? That bodes well for the Boeings, the Lockheed Martins, the Raytheons of the world. Does that mean we can rush out and buy these stocks today? No, not at all. Not at all. There's no technical reason to be jumping into these now. But as we kind of go into next week, start to get a few more earnings out of some of these are probably real nice plays that we will have for February and March within this group that could perform very, very well as early returns show that business is still strengthening. You can have an earnings report that's really good and showing that the business is growing and strengthening and everything else, and the stock go down. There's expectations that maybe we can't see. You never know what a big investor it was thinking. Were they thinking to just, hey, let's hold the report and then sell it? The actual price action can be a little bit choppy, but the actual fundamentals of what's going on and some of the things that GE said bode very well for this aerospace sector going forward here. Okay, we also had earnings out of Morgan Stanley. Very good. Really good. They did get hit on some of their trading revenue, which we saw a little bit in the Bank of America and the J.P. Morgan earnings, but it wasn't as bad as what it could have been. So very nice uptick here on Morgan Stanley, just kind of confirming the strength of the financials. Okay, and look, one of the things we have seen almost every quarter is earnings out of the financials have just led to strength. Some of them, the earnings are better than others, but overall leads to strength. We still have Goldman Sachs earnings to come out, and a lot of the other different ones, but overall bodes very well there. American Express, okay, and this is a report I haven't read yet, but they're up 4%. Capital One down 4%. And you say, well, these are two very similar businesses, right? Both of them have the credit card, and then they hold some of the debt. So they're not like a Visa who basically just makes money off the transaction costs. These guys are dealing with the collections and they actually own some of the debt that individuals acquire when they swipe their card. And again, I just saw the raw numbers on these. I will go back and read the reports here today. But Capital One and American Express, and I believe it was UJC talking about retail, and when you think of American Express, you think a higher end customer, right? Your wealthier customer. That's who their market. That's who they cater to. You think Capital One, you think of the commercial blitz, the what's in your wallet, the lending to some of the to the lower credit, lower income area. And so as I see this reaction divergence here with American Express up big, Capital One down big, makes me just kind of think about retail and say, wait a minute, okay, here's Walmart. Who do they cater to? Well, Capital One customers, right? Target, who do they cater to? Capital One customers. We see both of these stocks continuing to break down. Then you take a look at someone like Estee Lauder or some of these others that may cater towards some of the more wealthy customers. Is the report out of American Express enough to send these higher? Now, one that I'm really interested in, I sat and I stared at this stock for a lot yesterday, JCPenney. And JCPenney announced that they were closing, I believe it was 30 of their stores, their lower income stores. And a lot of times people say, oh, well, they're closing stores, that's bad news. And yeah, I mean, in general it is. If they were operating better, they wouldn't be closing stores. But a lot of times a stock can bottom on bad news. And, we saw JCPenney sell off, come back. My concern was, okay, is JCPenney really ready to go higher here? But it does have an interesting support level here. But I'd like to see it trade up above 7 before potentially getting aggressive with something like JCPenney here. Okay. All right, we're looking at a market down about 5 points here. Some of the stocks that were green initially have gone red. Nothing getting sold real hard that doesn't have a catalyst, but in general, there's a lot more red on the board than green here. Let me quick scan through here. Okay. What does this mean for FCX, Bank of America? Very little. Very, very little. We saw both of these stocks trading in the red most of the day yesterday. And then we got a nice little closing rally on FCX. You kind of break these down on an hourly basis. They're still in a nice position. Bank of America, this thing just the way it traded yesterday, and just watching it for the first 30 minutes this morning, it looks like it wants to be pinned at 17 here on options expiration, and we're probably not going to get much of a move off of 17. Anything above 17 is probably going to get sold. Anything below 17 probably going to get sold as well there. Okay. Oftentimes you've heard me say that options expiration, it's a tough day to want to establish new positions, and it's also a tough day to want to look at your position or look at one of your positions and say, well, it's fundamentally changed or it's technically changed and we got to move on. But price action can still happen. Into the close, generally, there's some things that you can identify and pick out. But into the close today, what I'm interested in, if I'm looking to establish a position, okay, into the close, I'm looking for something that gave bullish signals this week, not necessarily something that's giving a bullish signal today. Okay, here's Colgate. All right, Colgate. Into the close yesterday, I dipped my toes in a little bit of Colgate. Didn't have any cash left for the challenge, so I didn't do it for the challenge. But we have something like Colgate here that's had this nice little consolidation. Nice little reversal yesterday, pushed back above the 7. This is something that's not setting a fresh bull signal here today, but has been building. Really, the bullish signal came a week ago. And so it's something like this that, hey, if Colgate were to close around 35 or 65, this is something I want to be a buyer of here today, not necessarily something today with any sort of fresh signals. Okay, Jazz Ray. Okay. Good deal. Your short Target. Yeah, Target just has not been able to shake off some of that news as far as their systems getting hacked and messed with there, and you wonder, well, is Target going down because of that, or is it going down because of lower end retail getting hit? And you look at Walmart, you say, well, Walmart doesn't have the credit card issue, and they're doing kind of the same thing as Target. Costco is one that I've kind of been looking for a buy opportunity and really just haven't been able to get one here around 116. Overall, we continue to see more weakness there. SanDisk, love the chart, love the setup. This is very much like Colgate, okay, where we got the bullish signal a week ago, a little longer than a week ago, and now we're just kind of getting this consolidation and trying to march higher there. So I do like the setup there for SanDisk. Let me double check when earnings are here on SanDisk. Wednesday. Again, I'm not sure how much I trust FinViz here on that data, but approximately Wednesday. But it's kind of in that position to potentially push higher here. I do like Colgate better than SanDisk, just because of the way SanDisk has moved, how much it's already moved. Are investors going to push it higher ahead of earnings? Okay, you have something like Western Digital, kind of the same group and whatnot. Different looking chart. Earlier, Carl mentioned Las Vegas Sands, and Las Vegas Sands continues to have a strongly bullish chart. Some elevated volumes came in yesterday. Is this stock worth $80? From a valuation standpoint, it's tough. We're talking here on Las Vegas Sands. They do have good earnings projections next year, but we're dealing with some pretty lofty valuations on Las Vegas Sands and some of the other casino stocks right here. So it makes me wonder. Okay, are these things ready to push higher because of with those valuations? Are they going to be able to push higher before the next earnings period or before they release earnings again? Or investors really wanting to wait until earnings and then go and evaluate them from there? Okay. Joe, oh no. Oh no! You had to deal with some of that security breach with Target. No fun. No fun. That stuff. Never any fun here. Okay. All right, so that's kind of some of the stuff we're seeing here this morning. Overall market down. I don't expect a huge move in the market here today. I do find Apple interesting if it's able to close up above 550 here today. That would be quite interesting. The banks are pretty flat across the board, and the real strength here today is really kind of in some of the gold and the silver stocks. But other than that, things really are kind of keeping up with what they've been doing for most of the week. Maybe one more catalyst here with Twitter. Okay, I mean, Twitter was upgraded today, right? So Twitter goes up on days it's upgraded, down on days it's downgraded. The analyst who upgraded Twitter put a $75 target on him, simply saying that Twitter was worth 40 some odd $billion. Other analysts have come out and said it's worth 20, and there's a lot of argument of what Twitter is worth. Yeah, Mastercard here, Mastercard, and this is I haven't dug into the American Express and Capital One earnings yet, but Mastercard's a very different company than Capital One in American Express. Mastercard basically makes money on the transaction fees. Mastercard doesn't hold any of the debt. They let the banks hold the debt. The banks have to do the collections on the debt and everything else. So overall, Mastercard doesn't have to hold any of that debt, and very similar to Visa. And the price action here this morning on Mastercard and Visa suggests to me that this isn't an issue of the cards not being swiped a lot. Cards are still being swiped, but maybe there's some issue in the collections or in the debt of what's being held. I still like Visa and MasterCard higher. They still are compelling from a valuation standpoint. And some interesting little entries this morning. How much do you trust them being options expiration? That becomes the question. Yeah, Jimmy Hewlett Packard above the Bollingers. Yep. Trend rider bull signal. Yesterday sold off most of the day, midday, and then kicked up nicely into the close. Getting a little bit of strength here this morning. Bodes quite well. Intel earnings came out. And you see the big drop there, and this is very interesting watching some of the tech stuff start to come out. Intel, a lot of people want to say, well, Intel is a good barometer for technology. Typically, it's not. It's not a great barometer there. I think Micron is going to be much more telling from an economic standpoint than Intel. I think Intel just has some serious operation flaws and issues overall there. Okay. All right. Well, again, our positions with Bank of America and FCX, there's nothing here, we're kind of messing with at this point. I fully expect FCX to close somewhere around 37 here today. And again, if we get up into the 37.50, 37.60 area with a midday rally, I'd be very inclined to take that. Bank of America, we will most likely continue to hold into the weekend and throughout next week. We don't have any real issues with time decay or option decay there when it comes to Bank of America. All right, well, thanks for hopping on, and Carl and Josh will be on with you in chat, and I'll jump on video a little bit later here today and talk about some of the other things that are going on here in the market. Take care.